Ugh, I hate bills. Mortgage, paid. Gas bill, paid. Electric bill, past due. Uh-oh. Well, maybe my crazy tree-hugging neighbor was right. Maybe I should have got solar panels.
But Johnny, solar panels are extremely expensive to install, and interest rates are still very high.
Hi, magical floating logo. Wait, how did you get in my house?
Your window was unlocked.
Okay. Well, but what about when interest rates come back down? Isn't solar kind of the perfect option? You can generate your own electricity without relying on the grid. You can charge your EV, other electronic devices all from home.
You make a good point, Johnny. Now, go lock your windows, pay your bills, and get comfy. Let's talk about solar stocks.
Okay, so solar energy is probably my favorite disruptive technology. I like the idea of a technology that makes financial sense, but could also be beneficial for the Earth and for the environment. But as with most disruptive technologies, there is also a bear case. So I'm going to start with the bear case for solar, then I'll explain the bull case, and we'll talk about 4 solar stocks that I'm watching. So, the bear case. Solar energy isn't always as green as you think. So this is an article from a news source called Spectrum, and while they say that generating electricity through photovoltaics, which is what's used in solar panels, is indeed better for the environment than burning fossil fuels, they point out that the manufacturing of these solar panels actually does harm the Earth quite a bit. They cite a trail of chemical pollution. They also cite that the quartz, which is used in solar cells, is extracted from mines, which that's a whole debate of ethics as well as a debate for the environment. And the next step in the solar panel creation process creates a toxic compound called silicon tetrachloride. If you'd like to read more about the bear case of solar and why it may not be as clean as you think, I'll leave the link to this article in the description. But for the purposes of this video, I think we get the point that creating the solar panels is not exactly an environmentally or earth-friendly process. However, once these solar panels are created, they tend to last for a very long time. So one could argue that the ramifications of creating solar panels is worth the long-term reward of clean energy generation. Here's a slide from the investor relations deck of a company called Constellation Energy, and they show the projected US energy generation stack from today up through 2030. And as you can see, wind, which is this dark blue at the top, and solar, which is the green, show a lot of growth within the next few years, projected. This comes at the expense of coal, which is expected to decline marginally. Nuclear and other are expected to remain the same, which I find interesting, especially with all the talk of nuclear energy lately. I wonder if these estimates will be revised after all that. But we're not here to talk about nuclear energy. I did do a video on that already. We're here to talk about solar energy. And like nuclear energy, there are some who are hypothesizing that AI and data center growth are going to drive demand for solar energy. I've mentioned a few times on this channel, but there are some who are expecting an electricity shortage. And one of the ways to help solve this electricity shortage is to invest more heavily in clean energy projects such as solar panels. To really emphasize how much demand there is, this slide says that AI data center racks could require 7 times more power than traditional data center racks. And that's because the compute power needed for large language models is much, much greater than traditional computing. So accelerated computing is much more energy intensive. And data center demand is not going anywhere. According to this slide again, major tech companies are expected to invest $1 trillion into data centers over the next 5 years. So as more and more data centers get built out, there's going to be less and less electricity available to power them, supposedly, if you believe this slide. So, potentially, this is going to drive an increased demand for solar energy, presenting an opportunity when you look at just supply and demand. So, if this has piqued your interest and you think, well, maybe there is a case to be made for solar in the future, I've found 4 solar stocks that I'm watching, and I've laid them out on my high-quality company's spreadsheet so that we can analyze them and try to find the quote-unquote best one. These 4 solar stocks that I want to look at today are Enphase, SolarEdge, First Solar, and Nextracker. So let's start at the top. I put Enphase at the top because they did just report earnings, and the stock is down about 15% today as I'm recording this. You'll probably see this tomorrow. Enphase Energy is down significantly from their peak in December of 2022, down about 77%. And it's not just Enphase. SolarEdge is down even more from their peak, down about 95% from their peak. I actually did a full video on SolarEdge talking about some of the problems that they're experiencing and why their stock is down so much. So if you're interested in that, definitely check that out. But I'm getting ahead of myself. Let's talk about Enphase. Enphase just reported their financial results, and this is what sent the stock down. Essentially, their quarterly revenue guidance for the next quarter fell short of the market's expectations. Let me put this into perspective a little bit. So for the third quarter of 2024, they generated revenue of $380.9 million. And this is up significantly from the second quarter, which is up from the first quarter. So this is showing a little bit of a glimmer of hope for a return to growth for this company that hasn't been growing very well. But when we scroll down and look at their fourth quarter outlook, they're expecting revenue in the range of 360 to 400 million. So at the midpoint, that's no growth quarter over quarter, and at the low end, that's negative growth quarter over quarter. So the market really did not like this range. They did not like the possibility that Enphase could already be seeing some hiccups once again. So what's going on? Why is Enphase seeing some hiccups? So in order to answer that, I think it's important to find out what Enphase does. Enphase primarily develops these little chips called microinverters that sit on the back of a solar panel. It uses semiconductors and converts DC energy to AC at the source of each panel. AC energy is what we use from the grid and what we use in our homes. So this is a vital step of the process, especially for residential solar. It's estimated that Enphase makes the majority of its revenues from the residential market. So that's people putting solar panels on their roofs of their home to use to generate their own electricity. And like the floating letter A said at the beginning of this video, that type of thing is really nice if it's economically viable. So in order to install solar panels on your roof, it's not cheap. We're talking over $20,000 usually to install solar panels on your roof. And this can vary based on how much energy you need, how big your roof is, where you live in the world. But it's an expensive purchase that most people aren't really going to feel comfortable shelling out that kind of money all at once. So a lot of people finance these projects, and with interest rates being very high, fewer and fewer people are seeing an economic benefit from installing solar panels on their house. This has led to revenue growth of minus 42% year over year for Enphase. They saw, a couple of great years when interest rates were low, and now they are battling with high interest rates and consumers who are a little bit more hesitant to take out loans for solar projects. And it's not just the US either. Both Enphase and SolarEdge are geographically diversified, with Enphase making 36% of their revenue outside of the US last year. So it's not just a US only problem. People everywhere are feeling the pressure of the economic headwinds. However, has this made Enphase cheap? Well, that's a good question. When we look at valuation metrics, we can see that Enphase has a price to sales of 7, which is a bit above my portfolio average, a PE of 58, which is a bit above my portfolio average, and a price to free cash flow of just 17, which is significantly lower than my average. So you could look at this price to free cash flow and say that Enphase is cheap, but we also need to look forward and think about what Enphase's growth is going to look like in the future. If their growth is flatlining, then a 7 times sales and 59 times price to earnings is not very attractive. I wouldn't pay that for a company with no growth. But if Enphase can turn things around as soon as interest rates fall, maybe this is a really attractive growth stock at a discount. It all comes down to what you think about the future of solar. So if you're somebody who's quite bullish on the future of solar, maybe Enphase is a great buy today, especially as they're looking very close to 52-week lows. However, if you don't think Enphase is going to see this return to growth, and maybe you're bearish on the residential market, then maybe we should look at some of these other stocks. So Enphase, like I said, makes most of their money from the residential market. However, these next 3 stocks have exposure to the commercial market. SolarEdge, don't get me wrong, does have a lot of exposure to residential markets, but they also offer exposure to commercial markets. If you're curious why SolarEdge is down so much and you're thinking about buying the stock, I definitely recommend watching my SolarEdge video, but I'll kind of sum it up here. Essentially, SolarEdge had some inventory issues. SolarEdge sells their products to installers, and these installers use their string inverters when building out a new solar project. So when demand was very high and interest rates were low, SolarEdge developed and shipped out a whole bunch of products. But then interest rates began to rise very, very, very quickly, probably faster than people expected. This killed the demand for residential solar and really solar in general, which led to a huge overstocking of SolarEdge inventory, which led to a revenue crash for the company and also led to these ugly negative 4% gross margins. For those unaware, a gross margin is essentially your revenue minus your cost of goods sold. So when your cost of goods sold is higher than your revenue, when you're selling each unit at a loss, you have negative gross margins, and that is not good for a business. So that is likely one of the reasons why SolarEdge stock is down so much. Negative gross margins, negative growth, a weakening balance sheet, these type of things the market does not look too favorably on. So how I talked about Enphase making these microinverters, SolarEdge makes what's known as a string inverter. String inverters daisy chain a bunch of solar panels together, and then they connect to a little box, and that box connects to, for example, your home. It's very similar to Enphase's microinverters. However, with Enphase, each microinverter is installed on each solar panel individually, and SolarEdge, everything is all strung together, leading to the potential for a lot more problems. However, string inverters are much cheaper and much more economically viable for consumers who might be a bit more price sensitive. So they do have their merits. So you might think, okay, so SolarEdge is kind of the cheaper alternative to an Enphase, still works pretty well, should be seeing some great demand when times are tough, right? Well, SolarEdge, just like Enphase, seeing massive negative revenue growth. Actually, theirs is quite a bit worse. And like I said, their gross margins are negative. So that means I can't measure their SG&A or R&D to gross profit because there is no gross profit, and there's certainly no PE ratio, and they have negative free cash flows. So if you were to look at this company and say, wow, they're trading at 0.6 times annual sales, that's very, very cheap. In my opinion, you would be wrong because there's so many other metrics that look so bad for SolarEdge that I don't think the risk is worth the potential reward for this company. But once again, that's up to you. SolarEdge is definitely a turnaround story. So if you believe that increased demand for residential and commercial solar is going to help propel the company forward, and if you think that their revenue is going to grow, if you think they're going to be able to turn those negative gross margins positive, which they plan to do shortly, so that is temporary, but then they also need to turn a net profit margin and to have positive free cash flows. If you think those things can happen, then shoot, maybe SolarEdge is a great bargain right now. But for me, I'm just a little nervous about all the risks. So let's go to the next solar company, which is First Solar. So while Enphase and SolarEdge made the inverters that are crucial to solar projects, First Solar makes the thing that you see first when you see solar. It's the panels. First Solar is a US-based manufacturer of solar panels. This has been great for First Solar because they benefit a lot from the IRA, or the Inflation Reduction Act. And this is essentially an act that was approved by the US president, which allows US-based clean energy companies to get subsidies from the government. So companies like Enphase and First Solar, as well as the next company we'll talk about, Nextracker, all benefit, whereas companies like SolarEdge, which is an Israeli company, do not benefit quite as much. Okay, so First Solar makes solar panels. That's pretty easy to understand. And First Solar is looking really good from a financial perspective. They have nearly 50% gross margins, which is astounding for a hardware company. They're only spending about 27% of their gross profit on their operating expenses. Those are SG&A and research and development. They have a nice balance sheet with only a 9% debt to equity ratio. Their valuation is reasonable at 5 times price to annualized sales. That's lower than my portfolio average. Their revenue growth is quite astounding this year with 25% revenue growth. And their PE and price to free cash flow are both lower than my portfolio. So far, I think First Solar presents the most attractive opportunity when you compare it to the risks. Now keep in mind that all solar stocks do have risks, and also keep in mind that this year is 2024, and this is a US-based company, and there is a US election coming up this year. Either way, we are going to have a new president next year, and we don't know exactly what this new president is going to do. However, for the most part, investments in American clean energy are probably not going away. So this is a risk, but not a total showstopper in my opinion. Finally, let's look at Nextracker, ticker NXT. Nextracker doesn't make inverters, they don't make solar panels. So what do? They make these tracking devices that go and attach to solar panels to make sure they're always optimizing the amount of sun that they receive. So these things help the solar panels move in order to face the sun. It's quite an interesting little device. And as with most products that help maximize your returns on any investment, Nextracker is seeing some great growth. Their revenue is up 50% year over year. That's quite astounding. Their earnings are up 100% year over year. They even claim an increasing $4 billion backlog. Now, this backlog is essentially orders that have been made but not filled. So somebody says, oh man, I love the idea of optimizing my solar panel garden. I'm going to place an order with Nextracker, and Nextracker says, we'd love to fill this order, but we just can't right now. We're going to get to you when we have time. There's $4 billion worth of revenue on the table there for Nextracker. So to me, that's a good look. Additionally, the stock looks pretty cheap. While their gross margins are not quite as good as Enphase and First Solar, their valuation is so much lower. So they have a 1.8 times price to annualized sales, which is much lower than First Solar and Enphase. They have a less than 10 times PE ratio, again, much lower, and just 13 times price to free cash flow. So no matter what metric you look at, this looks like a pretty cheap stock, especially with 50% year-over-year revenue growth. So what's the problem here? Well, look no further than Morningstar. They put together an article pointing out the bear case for Nextracker. They say their profit margins are likely to moderate in coming years. So this spreadsheet that I have here makes Nextracker look like a screaming buy, but it doesn't tell us much about the future of the company. This 50% revenue growth is not going to stick around forever. These 34% gross margins are probably going to fluctuate. Once again, according to Morningstar, they say that 75% of Nextracker's customers are cost sensitive, which means they're not very sticky. So that means that Nextracker probably doesn't have a lot of room to increase their prices. They say that their robust profitability may be difficult to maintain. That's sort of a double-edged sword. And their international expansion may face challenges. So going back to my spreadsheet, they do have 42% of their sales originating from outside the United States, so they've already expanded quite a bit. However, as with any small company, Nextracker is just a $5 billion company. It is difficult to expand internationally when your resources are limited. So there are a few red flags for Nextracker, but I believe that might be baked into the price. With such a low valuation on all three metrics I look at, I think Nextracker merits a little bit closer look. So while today's drop in Enphase might make it seem like a good buy, I actually prefer First Solar and Nextracker over Enphase. For one, they're tied to the commercial market, which is going to be a bit more stable than the residential market. And also, their valuations just look a lot better, and you don't have to worry about a turnaround story. They're growing right now. They don't need to turn anything around just yet. This, of course, is not a recommendation to buy any of these stocks or to sell any of these stocks. I simply wanted to give you my methodology and look at these 4 solar stocks to see which one looks attractive today. If you disagree, let me know down below. If you like this video, please like it, and if you disliked it, please dislike it, and please leave me some constructive feedback. I'm always trying to improve. Thank you guys so much for watching the video, and I hope the sun shines brightly on you today.